Hello everybody, Senior Analyst Kyle Custer and Chief Analyst Jamie Sumner back in the picture.
Good morning.
And most of us were probably off or in and out of the office last week, and we want to do a little recap and of course the big release today, which was the GDP release. So really it's more of a what was a surprise in the last couple of releases, because the FOMC minutes did come out. There's a couple speeches last week, but I think everybody was sort of on vacation. But consumer sentiment, University of Michigan puts this out, and what it gives you a good idea is it portrays consumer spending, which is a key component of GDP, 2/3 of GDP typically, or more. So what we recently got in here, and it might be hard to see, but consumer sentiment jumped at the end of October, and they release this every 2 weeks, and this is a revision for all of October. And it jumped significantly. This is a good indication also of the election results. It really shows that a lot of people have that sentiment that Donald Trump will deliver on a lot of his economic stimulus promises. It's very clear. But what I like to also point out is we've now consistently been at levels pre-recession. I mean, we're looking all the way back to 2007, before the decline into the recession. And consumer sentiment's a good indicator of an oncoming recession. And we've consistently been at the levels that we were seeing extreme growth in housing prices and very unsustainable standard of living at the time before the recession. So, and here it is, our first slide on the GDP release that came out today. And wow, it actually ticked up a little bit, and that's
big surprise.
It's definitely a surprise. But I would describe it as a tick up. It's a lot of, what we're showing here is, the change. We have the release that we just had previously. So originally we thought, personal consumer expenditures had increased from the previous quarter around 2.1. We're now at a 2.8. That's great. Durable goods, a component of that. Again, we talked about that in the last release. That was a huge component. That's a huge growth rate over the quarter. We're looking at the investments. That actually came down a little bit from the release, but look at that. From the change from the second quarter to the first quarter, we were in the negatives. A lot was in the negatives out there. And there's a residential fixed investment. That dropped, but it dropped less. So all in all, these are a lot of improvements all around. Gives you that 30 basis point tick. Jamie, why don't you talk about the contributions to the total GDP number?
That's right. When we're looking at contributions, it's always important to see the distribution and how they've changed over time. And as you know, the four areas that we look at, the consumer spending, the private investments, the government spending, and then the net export-imports. And you can see the difference here from where we were in the second quarter release when it came out at 1.4%. You see where the consumer made up 288 basis points of that 1.4%, a pretty big number. Then we flow over from where we were in the second quarter to the third quarter. The advanced release was at 147, and then the second release that just came out this morning at a 189. So we saw a pickup between the two releases, the advanced versus the second estimate, of a little over 40 basis points. So that's a positive, showing that consumer spending picking up. However, we are still below where we were back in the second quarter number. The investments portion, which is the biggest change that we see in here, you see where we were in the second quarter at a negative 1.34. Flow that through to where we are today at this second release here, the second estimate, at a 0.34. So we saw a 168 basis point shift in that number. And that's huge. That's a huge contribution to that 3.2% change from the second quarter. So that's a big number. We saw good headway. A lot of that came in forms of the inventories, which was up, or contributed 64 basis points. So that was pretty significant. And we'll see the impact of that when we look at the next slide here. But government detracted 30 basis points in the second quarter. Now we're adding 5 basis points. Again, overall positive change. And the inventory, or the exports imports, was a positive 18 basis points, now 87 basis points. Very strong here. Then we look at the next slide here, and this is the final sales to domestic purchasers. So this is basically GDP, but then we're stripping out the domestic or the change in private inventories. And the import exports, just stuff domestic. And you can see where we are now at a 1.7, up a little bit from the advanced estimate at a 1.4, but still below where we were in the second quarter at a 2.4. I mean, you look back, going back to 2013, where these numbers have been. So we're right around a little less than the average in here for that time period. So while the overall number pretty strong at a 3.2, we estimated it to come in around 3% out in the market. So it's a surprise it came in 2 basis points higher. And then we look at the final sales coming in a little stronger than it was on the advanced estimate, but below the second quarter number. So overall, we're still in this very low level of growth in here. It'll be interesting for the fourth quarter what the numbers we see. Black Friday seemed to be a success, and big numbers coming out this week on the success of Cyber Monday. And I don't know about you, Kyle, but I know my wife has done probably about 85 to 90% of our Christmas shopping online this year. So that's a significant change.
It's cold, it's rainy, we don't want to leave the house. Just
exactly.
Click a button and get it.
All right, I think that's it for today. We have another big release this week. We look at the unemployment numbers coming out at the end of the week on Friday, and then on Monday we have the LMCI.
That's right.
So we'll look at those numbers next week. Everyone, have a great week.
Thank you.
See you next week.